Hi, I'm Dan. This is my partner Terry.
Hi guys.
And Sue asked us to tell you a little bit about a deal that we've been working. It was actually our first multifamily deal, and what we did was we used a lot of creative techniques to put the deal together and to greatly enhance the value of the property. So this was like I said, our first multifamily deal. We had looked at several markets, and we flew out to this one market. We contacted several brokers, told them we'd be there. We're looking at their properties. There was one broker who had been sending us some deals that weren't very good, but we said, hey, let's call him anyway, tell him we're in town. Once he knew we were in town, he kind of opened up and said, hey, you know, I do have this one property that I've got that I haven't really listed yet. And so we, he said it's bank owned, and we, our ears immediately perked up because, we love bank owned properties. We've done some of that with single families. And we went and looked at it. It was exactly what we were looking for. It had some problems. The occupancy was really low. It was like 65%, which would normally be a problem. But we knew why it was 65%, that they had just put the stairs to the upstairs apartments in. And so they couldn't lease them until then. So we got the property under contract. And then we told the bank that they need to carry back the financing. They said no, they don't want to do that. But as Sue always says, they're always going to say no initially. But we just were adamant and said, if we can't have them do seller financing, then we really can't do the deal. We'd have to bring in a bridge loan, and that would be a totally different price. So eventually they came around and said, yeah, we'll do the financing on that. So we bought the property. We used a lot of the techniques, about building a nice culture at the apartment. We threw gifts and parties and things like that. We got the occupancy up to 85, 90%. And what I didn't mention was that this was originally a 4-building apartment complex. The 4th building had never been completely renovated. So, and we bought the 3 that had been renovated already. So as soon as we bought it, the guy that had the 4th building was contacting us trying to sell us the property, but we said, no, we're not interested just yet. A couple years later, we're now at 100% occupancy basically. The guy contacts us and we say, okay, well, let's do a deal. I can't finance your property because, you've only got like 2 up units, the rest are vacant or completely down. But what I'll do is I'll do a lease option. We'll take over all the management responsibility. We'll collect the rents, pay the utilities, do all the repairs. We had an option that we recorded, option to buy recorded to cloud the title, so he couldn't do anything funky out there. So then we completely, as we said, we completely renovated the property. We actually borrowed money from some mutual funds that we were able to borrow at like 3.5%. So we didn't have to sell the mutual funds, we just borrowed against it. So that's something you need to talk to your bank about. And then after we got it renovated, we leased it up. We talked to a bank about refinancing, a different bank about refinancing all 4 buildings. And what we were able to do was we bought out the loan on the first property, we paid for the purchase price of the second, we paid out all the rehab costs, we put new roofs on all the buildings, we put a good chunk of money in our pockets, and when all was said and done, we'd increased the net equity in the property about $300,000.
And double our cash flow.
And doubled our cash flow. So now what we've done just recently is that we found out through our network down there that the property next to us was going into bank foreclosure, and we contacted the bank and we had to negotiate with them for about a year, but we're doing the exact same thing, except this one doesn't need to be renovated. We're just going to refinance the property, roll that into there, and basically we haven't, except for the original purchase price, we've added 12 units and then 6 more units at no money down.
And it's really important that you learn the right techniques, because remember, our apartments were almost 100% occupied. The 2 apartments that became available, they went into foreclosure because they didn't do anything right. They must have bad property management, their occupancy was low. We like those. That's why it's important to learn the right skill sets, the right analysis. Do it right and don't lose it. Otherwise, we're going to become your best friend. Sue, thank you so much. You really helped us on everything we do. We feel we're very successful. We're doing much better now than we did just a few years ago.
Yeah, I mean, it's all these different tricks and tips and techniques that we've used that's, you know, really allowed us to greatly increase our net worth and our knowledge, and you know, it's these kind of things that Sue teaches that are just invaluable.
Yay! Thank you, guys.